Hello, Warriors. We made it through the week. The number today, the PCE, was in line. In fact, Bernanke gave the number at the Fed meeting last week. Not much of a market reaction. Dollar came in a little better, and it's giving up those gains. Dollar's really having a hard time rallying. I think that the pop that we had was about it for that trade. Uh, my takeaway from this week is I finally have some conviction about yields and rates and began probing and building short positions in the US dollar yen. And, I think that there's more bang for the buck being short US dollar yen than there would be, say, being long euro, being long cable. There's much more beta in the yen. So why don't we just get to the charts and talk about it? We'll also talk about the gold trade from yesterday. Okay. Anyway, I'm considering shorting GDX. Unlike the physical market, the miners are diverging pretty significantly. And, when you look at something like Newmont, it looks strong here, but when you look at it daily, uh, to me, it looks almost like a bear market rally, right? I think 50 B61.8 back in Newmont. So considering just for a trade, counter trend. Um, all right, well, let's cover the gold trade. So it was a trade that we were prepped and it could be topping, but the RSI is a little stiff for me right now. Anyway, we prepared for this trade for about a week or so, and the trade came in here, and it wasn't a top, it was just a top from yesterday. So this was the action, okay? And we had divergence on the 4 on this pullback that we had. Before we started, we had this one pullback. It was about 25 bucks, but basically the trade was put on at 30.52. So that was up here. Let me move myself out of the way with a $15 stop. So here it was right here. It was 30.55 was the high. The plan was always in every trade is to take partials. I said if you have 10 bucks made, take it. So the break was actually down to about $23 break. So the probe, the partials, and then protect the remainder with B stops. It was a winner. So I even tried it later in the session because I had divergence on the 15. Anyway, sure, it would have been easier just being long. But anyway, that's an example of being wrong the market, right the trade, which is the exact opposite of what a lot of traders go through, myself included, being right the market, wrong the trade. Well, you know what? Bottom line, I'd rather be right the trade and wrong the market, that it wasn't a top, but the timing and the justification for the trade based on the 4-hour divergence, which was, you know, here, we were here when that was happening on the pullback. It was this candle, and that's all it was. It looked like it was going to be a reversal candle, but we don't have it wasn't the top. Anyway, I'm not pressing it now because look at the RSI. It's up near 80. So I just have to leave it alone. I still think that we're coming into a zone where this is a fifth wave and we're peaking in the gold. But I guess I'll just wait till next week, although it's already starting to fade. Um, I'll even use some of my shorter term charts to get on board this, like a 30-minute. And the 30-minute has a confirmed high here. So maybe it's going to be next week. Maybe it's going to be up around 3,100. But remember, the other P is persistence. because how many times were we buying US dollar yen and making money, but not big money until it broke out of its falling wedge, okay? There were many attempts, at least I'd say four, to catch a trade. None of them did we get hurt on, but while we were in this falling wedge, we had longs that worked, we had some longs that worked, and finally the longs worked for the trade that actually achieved the objective at 151, which is how you count what wedges could do. And now I'm pretty convinced that yields are rolling over. And I'm going to start. I started yesterday, put out some shorts at 51.03, last 61. But you know what, guys? I really think, we identified this top, okay, above 58. We ride it all the way down there? I didn't. Maybe you guys did. There were a couple of shakeout days, but I said last week I want to get back on board this train because I think we're going to 140. Okay, and the correlation is in line too because look at the 10-year yield. It looks even weaker than the end. So that correlation's at work. Even TLT, which I talked about a top from 93, and we had this little ABC. It's got to hold 88, but this could just be corrective and yields could be about to head higher. So the big shift is the yen. We're going to stay with this. We'll build positions and we'll um, be patient and hold cores till 140. Because if we break down under 140, you're talking big numbers. You're talking 120. Okay, so just something to keep in mind that most likely rates are coming down because we're going to have some type of growth scare. Now, is that going to be supportive for risk, or is that going to be, um, uh, you know, where people are running to hide in the bond market? We'll see. I still am not short. I made some money being in NVIDIA puts for a while. Let's see. It just doesn't feel like it's going to go. It's a reversal week. Um, but I just did a scalp in NVIDIA. Let's see what NVIDIA is doing today. They're hitting NVIDIA's down. NVIDIA's not open yet. They are hitting Bitcoin. Anyway, I'm looking for a rally to sell. I held my banking shorts in B of A. Um, that uh, that trade looks okay. You know, here's the weekly kind of closing near the low of the week, almost a reversal week from 50%. So even if it works up to 44, I'd put more on. But I think, we're going to see 36 or lower. But the big position or the change of conviction about yields in the yen is my takeaway from the week. The dollar still looks weak. Um, in fact, earlier in the week, the title was to look to buy euro at 107.30 and look at 107.30. Okay, so there's a weekly 50. So it's not even higher on the week. You probably want to protect yourself under 730 because if that happens, we could trade in the sixes. So be careful with that. But look at the daily and how the lines were it was almost like a magnet. So I had that black line drawn that you can see fairly clearly on the weekly, but look at the daily. And you also had a moving average come right in here. I don't see anything bearish about the euro. Um, I really don't see anything bearish about cable. Aussie's definitely a laggard. I don't know. I don't feel like I should be in a hurry to buy that. I'm bearish again. USD CAD looks like it wants to roll over. If it does, I think 140 is viable, but you never know. We're going to have all the tariff stuff next week. The dollar, I think, peaked out this week and we're headed down to like 102. Um, Gold, I still think is in a topping phase, but I need to see more distribution. Maybe this is 1, 2, 3, or maybe this is 2. Silver, I can't get bearish silver until it achieves the objective, and there's still room to run when you look at the weekly. I've been talking about this 3 drive to a top in a weekly for a while, and we're not even close. So I think there's at least a buck and a half left up towards 36 or so. Some people are talking 37, but it looks pretty good. And I'd like to see this S&P rally continue into mid-April, maybe taking us back towards 61.8. That'd be a nice fat pitch. If we got up to 59.20 with all the confluence, 58.50, at least halfway. We didn't make it halfway there. And in NASDAQ, all we did was make it 38%. So I still think there's potential for this to rally. And actually saw a very interesting count in NVIDIA for that I'll be paying attention to. So here it is. That this rally is, was A and A, B, C, and we're going to bottom in here and make a run up towards 128, 130 to complete this and then roll over. So I'd be backing up the truck on puts should that scenario unfold. I still don't feel like I'm missing anything in Apple yet. Had a decent week. Still think it could push up towards this halfway back, 229, 61.8, 234. So that's a wrap, everyone. Hope you had a good week, and tell me if you learned anything and what it was this week. And above all, don't just count your pips, count your blessings, and I'll see you in the room. Adios.